Good morning, Paul Georgie from Allendale. It's June 28th, Friday morning. We've got the USDA reports today that traders at the CME will be focusing in on, but everybody else around the CME today is going to be focusing on celebrating the Stanley Cup victory of the Chicago Blackhawks, expecting several million people downtown today for this celebration. So that will create some distraction, but the USDA report at 11 o'clock will certainly impact our markets. Traders overnight were quiet, some last-minute adjusting of positions we've seen. Not really much news, but I think what we have to take away from the market here is how positions and how markets have moved over the last week and what traders are expecting out of it. Looking at the old crop, new crop spreads, July versus December, or July versus November in the soybeans, they moved significantly this week. With corn had a low spread difference of 108, and right now we're trading at about 132. In the soybean complex, the July-November spread gained 53 cents this week. So a lot of anticipation that old crop supplies will be tight. New crop will see planted acres increase, and in corn, trade's looking for about a 2 million acre decrease is what the average estimate is, and about an 800,000 acre increase in soybean planting. So expect volatility after the 11 o'clock report release. Some of the outside market comparisons: China's soybean market quiet as well. Meal in China for the week has been down $1, while the July contract at the Board of Trade was up $32. So some differences of opinion there. Palm oil market around the world continues to slide here overnight as well. Only 2 deliveries in wheat. Open interest changes yesterday. Continued to see a slide in open interest. Corn dropped 32,000 contracts, and soybeans were down 11,000 contracts yesterday. People getting out of the market ahead of the first notice day, ahead of the USDA report, and the last trading day of June. There is rumor circulating that China is looking for some new crop corn. That we'll have to see how that develops as after the report comes out. We've also got outside markets that are providing a little bit of support here from the overall commodity perspective, where Japan released economic data. That was the best data they've seen in several months. So that has given some strength to the gold, silver markets here this morning. We've got a quarterly hogs and pigs report out at 2 o'clock this afternoon. That will certainly impact the hog complex. Right now we've got July hogs futures very close to contract highs, and as they set new highs this week. Cutout values in the pork was down $1.68 yesterday, but that's after posting some record highs for product. What we're seeing is the beef is taking a back seat at the retail counter. We've seen the high beef prices affect the market around Memorial Day, and now we're seeing high pork prices and an increased pork product demand here for the July 4th holiday. We expect that retail buying is pretty well complete for that. There may be some fill-in buying early next week, but could see some easing off of the pork product prices here as we go into next week. The choice beef up 87, select up 111. Cash cattle trade is still at a standstill. We're hearing bids from the packers in the south of 117. Feedlots it's still offering at 122 to 123. So a standoff in the cash trade. We've got, I want to remind everybody that Rich Nelson, our chief strategist, will be recapping the USDA report on grains here at around the 12 o'clock time frame. So make sure you check in and watch the YouTube on that. He'll also have reaction to the Hogs and Pigs report here after the close on the livestock commentary and the Allendale Advisory Service. So if you got any questions, give us a call, 800-262-7538. We wish everybody a very successful trading day, safe weekend, and we'll talk to you on Monday morning. Thank you.